Hello, everyone, and welcome to this evening's session, Stock Trading and Investing using Volume Price Analysis. Well, it's evening for us here in the UK, but it's probably the afternoon where you are in North America, because I do know we have a lot of visitors from that part of the world. But wherever you are in the world, thank you so much for taking some time out to come and join myself, Anna, and my husband David, who is sitting over the other side of the room. Before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading and investing comes with risk. So please don't ever use money that you cannot afford to lose. Apologies, I almost forgot to say what I meant to say. You know what I meant to say. You can see the disclaimer that is there up on your screen. Those of you who come regularly to this session will know we have been MIA, missing in action. There's been a very good reason for that. We have been working really hard to finish the stock trading and investing program, and I'm really delighted to say that it is complete at last, and we will be looking to launch it literally in the coming weeks. We haven't actually fixed a firm date because there's a little bit of snagging that still needs to be done, and we'll certainly would like to share with you what that program is all about, what's included in it. We've also included some new indicators as well. Before we do that, I've got up here at the moment what the state of the market is. And as you can see, it's a sea of pretty much red, except for Nvidia. Not surprisingly, given what happened yesterday. It's come off. It hasn't come off as dramatically as perhaps the heat map shows. But what I'm going to do later is I'm going to actually focus pretty much on the SPY. Part of the reason is I've been posting some quite detailed charts on that particular instrument, because not only is it practically the most popular one that's traded directly and from an options perspective. So I've got a sort of narrative for it with regards to support and resistance levels, all sorts of things. So yeah, I think it would make a nice continuation of that. And you can catch up with my thoughts on that either at on my Twitter feed, and my handle there is at Anna Cool. That's ANNACOULL. And I also post up the charts on my Facebook page, and that's my personal Facebook page. I think it's called Anna Cooley Author for some reason. So you've got a little bit of back story to that. With regard to the program, as I said, the reason why we have been away from doing these webinars is because it's just involved so much of our time. It's such a comprehensive program. It's called the Complete Stock Trading and Investing, and we've chosen that deliberately because it really does cover this spectrum that we have from trader at one end, trading very fast charts, trading ODT options, right up through to investor and asset allocation. And you might think, well, why have you done that? Surely that's not possible. There should be some sort of divide between these two groups, as it were. And to some extent there is, but there's an awful lot of overlap. There's an awful lot of commonality. Yes, we accept that possibly at the trading end, where we're talking about shorter time frames, maybe the micro data, the fundamentals of a particular company, a particular stock, may not be quite as important as if you are looking for a medium to longer term investment. But at some point, if you start as a trader, you will make that journey to becoming an investor, and then you will have to look at asset allocation. And we just felt that we wanted to put something together that is for life, basically. It's although we have created the program, we will be adding to it, because in this business, if you've been around even for a relatively short space of time, you know you never stop learning. Things change so dramatically. I mean, compared to what life was like as a trader and investor when we first started, I mean, it's like night and day. And even in the last couple of years, well, certainly since the pandemic and the explosion with ODT options, this landscape has changed beyond all recognition. And you probably read that, they say, the retail crowd, they're really into ODT options. They even talk that, you know, they could potentially destabilize the market. I have to tell you that when you look at the actual figures of the participants in those options, it's not just retail. Institutions use them, funds use them for a bit of momentum trading, as it were, to make some money. So it's a much more complex landscape, as it were, and we have included that in the program. So even if you are not interested in options, you still have to understand this new relationship really between stocks and options. Nothing like it used to be when David and I first started. So there's that we wanted to include. The commonality, as I've said, the retail, that's pretty much it. And the last thing is we have actually developed some new volume indicators, and that's something we're really excited to share with you today. David will have them more on his charts than my chart. I've only just got one of them. I've got Trading View. I need to do a bit of upgrading to my platform, but David has all of the indicators, the new ones that are up to date. And of course, if you have bought one of our full packages, if you're a quantum trading user, you will know that whenever we develop new indicators, they are automatically added to your package. You don't actually pay us any more money, but they're also available on an individual basis. They're not available for sale at the moment. Everything will be released when the actual program is finally launched. I think that's all I want to say, David. I think David probably has a few more bits and pieces that he'd like to add to that as well. So I will pass him over to you. As I said, this is what we're looking at the moment is the landing page for Finviz. It just gives us a flavour of what is happening today. I'm going to look a little bit more not only what's happening today, but more importantly tomorrow, because tomorrow we have Jackson Hole, the sort of yearly symposium in Wyoming. And you may like to scroll back on your daily charts for the indices, and you will see what happened last year when Jay Powell actually spoke, and you get all sorts of comments from other central bankers. Christine Lagarde is going to be speaking, and we've got other Fed speakers as well. We had some quite dramatic price action on that Friday. Whether it's going to happen tomorrow, who knows? Markets, it's a bit like history. They may not necessarily repeat exactly, but they do rhyme. And certainly after yesterday, it's no surprise to see a little bit of calming after the Nvidia fireworks, as it were. But tomorrow could be a very interesting day, and certainly an interesting day to the week. And we'll have a look a little bit more closely at the chart when you come back over to me. What else of note that's on this landing page? I have to say, I think this is an upgrade for Finviz, or I pay for the elite. Maybe it's only available. It's really nice to see some indication of market breadth. Now, market breadth is essentially the number of stocks that are over significant points on their charts. I mean, we have here the 200, the 500, the 50 MA, new highs, and you've got the advances and decliners, because sometimes you can see price moving and everything on the surface looks rosy. You know, as VPA traders, that isn't always the true picture, because unless you apply the principles of VPA, there's an awful lot that's going on underneath. And one of the ways you can see, if you like to test the health of any move that you see in the markets generally, is to look under the hood, as it were. And it's just, you can't use them necessarily as a signal on a short-term basis, but it gives you a perspective of really how healthy, how strong are the moves that we're seeing in the markets. The markets are desperately trying to stay up. They haven't gone back and tested last year's highs, but you know, as I've been saying all along, or saying for the last few months, they're not quite ready to fall yet. Who knows? Maybe Jay will give them a sort of shove that so many commentators and analysts have been saying. It's time for a major correction, but we'll see. I'm going to stop there. I will pass to David, and then we'll go backwards and forwards. So we'll have a look at some charts, have a look at some applications of VPA. As I said, I'm really going to focus on the SPY because I have this sort of backstory to it, and I'm sure David's got other bits and pieces. If you've got any questions on anything that you see or you hear, just put them into the chat box, and we will be more than happy to reply either texting, or we'll do it on air so that we make sure everybody is aware of the question and the answer.
Lovely. Yes, I'm on the SPY as well. Hi, everybody, and very warm welcome. Good to see you. I recognise some names in the list, and also some new ones there as well. So very warm welcome to you, whether you're a regular or a first-time visitor to us. Where to start? I've got a lot to get through, and I will do it fairly quickly because I want to pass back to Anna, and we've only got an hour or so, and hopefully you can hear me okay. We've got these new microphones which are much clearer, and we've done away with the headsets which were there's a lot of clicking when you get jack plugs that don't fit properly and all the rest of it. So hopefully this is much clearer and without all the annoying background clicks. Just to really add my thoughts to what Anna said, we have spent a colossal amount of time. For those of you that know us well, and I can see a lot of the names in the list on the webinar, you'll know that everything we deliver, we try to over-deliver as much as we possibly can, and the same applies to the stock trading and investing program. We took nearly 2 years to put the Forex program together, and this has taken us pretty much the same time, if not a little bit longer. And that's how much we put into it in terms of what we believe should be in there, the content, the breadth of content. And as Anna said, we go from, at the one end, we've got 0 DTE options, and at the other end, it is pure investment and everything in between. So we've covered every single aspect. And if you read some of the comments on the Anna's Twitter following, it's not only is it humbling that so many traders out there are finding success through volume price analysis. What's also fascinating is the amount of money that some of these guys are making, and girls. And at that point, you then have to ask yourself, well, okay, I'm making all this money. Now, what am I going to do with it? Okay, you can spend it. Of course you can. But there's always going to be the investment angle. So it moves from the out and out trading aspect of simply not caring what it is you're trading necessarily. In other words, you have no emotional attachment to that particular instrument other than it is one you choose to trade because it's going to make you money. That's really only your motivation for getting involved with it. You don't love the index, whatever it may be. You're just there to make money, or whatever it is, the stock. It is just a facility for making money. But once you start making that money, you then move to a different level where I'm not saying you become emotionally attached to stocks, but you are much more invested in them emotionally because they are part of your future. And that's the kind of emotional arc that you travel on from, and we've done it, where you you start off in this business as a pure investor. That's what you're looking to do. You're looking to make money, and gradually over time you go through this arc of traveling this emotional journey whereby you now look to protect that money that you've worked so hard for and you've traded so hard for, and now you want to build a blanket and build a moat around yourself, if you like, and safeguard that for the future, for your own retirement, to pass on, etc., etc. So it's a very, very interesting perspective to consider, and that's the reason we put it all together in this one complete package. It's not been easy. There's a huge amount of content in here. I can't tell you how much content it is yet, and that's why it's taken us so long. And in addition to that, as Anna said, we've also developed some new volume-based indicators, of which this is one. I'll flip-flop between, I'm on TradingView here, but I've got Ninja up in the background as well. So I'll show you it on Ninja. Those are the two platforms that we have at the moment, and those are the two that will be rolled out with the program with all the new indicators, but obviously they will be added to both TradeStation and also into MT45 as soon as we possibly can. So we've done all the graft of developing them, of testing them, and then it's just simply a question of the development team replicating it on the other platforms to bring everything up to the same level. This is the VRSI indicator, what we call the volume relative strength indicator. I'm just going to pull up one time frame. I'm not going to go through the whole lot. We're on the SPY here as well. And this is an extension of our volume price analysis methodology, because this is volume relative strength indicator. So it's looking at volume from a relative perspective, and it's then presenting that analysis in a very visual way. And it does this at the bottom here. But the one point I stress, I've done a lot of videos on this, which will obviously be rolled out at the same time the indicator is released too. I have stressed the point that this is used in combination with VPA. With our standard below this, you would have the same chart with our VPA indicators on, and obviously volume, because the two are used in tandem. I'm just showing it in isolation here just for simplicity and clarity, but you would use it in combination with volume, obviously below. You could add it to the same chart, but again, I've removed it just for clarity. The indicator has three prime aspects, if you like. The first is the midpoint here, which is your fulcrum of 0, if you will, where sentiment changes from bullish to bearish or from bearish to bullish. So pretty straightforward. That's one area you're looking at. The second aspect to it is very much color changes. Where you have these bright colors, this is very bullish. Where that bullish sentiment diminishes or weakens, we transcribe into darker colors. So we go from bright to dark as that sentiment wanes and diminishes. And equally, over on the bearish side, we have dark blue here for bullish. That's very bullish sentiment, where we have the darker blue, bearish, I beg your pardon. And where the sentiment starts to diminish or wane, then we move into this knocked back color, the darker color. So we have bright colors for very bullish or very bearish, and darker color where sentiment is weakening. So that's the second aspect. And if you're familiar with the trend monitor, you'll be very familiar with this concept of color changes, where on the trend monitor we go from a bright red to a darker red into a darker blue, and out the other side into a bright blue. Very similar sort of progress here. So it has a lot of elements of that to it. The third aspect to it is very much in terms of the height of what we call the pressure bar. Because what the VRS indicator is about pressure. It's how much pressure or momentum, if you like, is being applied to a move. Is that move strong? Has it got a lot of pressure to it? Has it got a lot of momentum to it through the prism of volume? Or is it lacking that pressure that's going to drive that particular trend quickly higher or quickly lower? So the height of these bars is absolutely critical. And in a very simplistic way, the taller they are, then the stronger that pressure that momentum driving the trend is going to appear on the chart. And what you will see associated with trends is, and you've got an example here, where the trend is relatively weak. It is a trend, of course it is, it still is, but it's relatively flat. It's got a very low angle of incline, if you like. It might be 10, 15 degrees. It's just climbing, but it's climbing very gradually. And that will be reflected in the height of the pressure bars associated with it. And where you get these explosions of price action and the trend rises very sharply, then you will see much, much taller bars appearing on the indicator. So those are really the three key concepts. And you can see that really described in this bearish trend on SPY, which has been going on for much of the day. And that trend, whilst it's still bearish, is now flattening. Now, what's interesting about it here is that, first of all, we've got these very tall bars. Now, they are being maintained across this piece of price action. And what that tells us is that despite the fact that we've moved into these darker colors here, these transitional colors, where that strength is weakening a little bit, the height is still pretty much maintained. It hasn't fallen away as sharply as it had over here, for example. It's still being very much maintained. So what this level through here, where the pressure bars are very much at the similar or same sort of level, is it's giving you the confidence. It's really telling you that momentum in that trend is being maintained. It's not dropping away yet. So don't get shaken out of that position where you get these little pause points, where you get maybe little rallies and all the rest of it that are so damaging when we've got a strong position in the market. So it's immensely powerful in that respect. And then, as you can see, as we move down, we start to see a reversal. Is this going to be a strong reversal? Well, it hasn't actually got back to the fulcrum line at this point. So until it does and starts to develop some bullish momentum, then all this is just a minor reversal. And it never actually reaches the fulcrum point before the bearish trend is picked up once more. But the strength of that trend is very much diminished from the strength of the trend over here. And that's because the angle of fall here, this is a classic price waterfall, very steep, very sharp, moving quickly. This is a much more relaxed downtrend. Downtrend nevertheless, lots of weakness in here, lots of signals for weakness, market trying to rally and fall back. And that would have been under good volume, no doubt, as well. And then what you're seeing here is that trend, that flattening of the trend, also represented in a flattening of the indicator as designated by the height of the bars that it's revealing. Now, as I say, I've done a lot of videos on these indicators, so this is just a very quick run through to give you a flavor of how they will be appearing in due course. As Anne said, they're not released yet. They will be. It'll all be rolled out once the program is delivered. The other aspect to this indicator is that in the analysis, and this is what's interesting, we use a lot of the principles and analytical techniques that we use when we're using our volume price analysis methodology, our core underpinning methodology. And by that I mean we look at things like the rising pressure bars here. And exactly in the same way that we would look at rising volume under a falling market as being very supportive, indicative of a move that's strong, very strong downtrend, which is what we want to see. In other words, volume and price are in agreement. It's very much the same principle here. We are seeing the pressure bars rising and we are seeing a falling market. So again, it's a wonderful extension. It's almost like a peeling back of, it's another layer of volume price analysis methodology, which we've now taken, we've gone inside, if you like, to peel back the layers of volume price analysis itself and really look at volume in a different way and present it in this very graphical way, but one, I think, which mirrors very much the underlying methodology itself. You know, we have rising trend, we want to see rising pressure under it. It's precisely the same. And when we see that sentiment waning, then we can assume that perhaps that trend is weakening or coming to an end. So there's a lot of similarities there. So that's the VRSI, the volume relative strength indicator. Just click that one off. And of course, we always use it in multiple time frames. And as I say, you would either put the volume indicator on here directly if you're comfortable with that, or alternatively, you just have a repeat chart underneath. I could make this 4 on top and have 4 straight, exactly matched time frame charts, but purely with volume, and maybe with accumulation distribution indicator, maybe with the VPOC as well. So you've got the complete array, but you've got your VRSI running on one chart above. Still pretty bearish, as you can see. It works in all time frames. We've got the 1 minute here, got the 1, 3, 5, and 10 on the top, down on 15, 30 daily. We've got 2 dailies there for some reason, not quite sure why. So it works in all time frames from the fastest to the slowest. So that's the first one, that's the VRSI. The second indicator, which I'm sure you're familiar with, is the one called the VWAP, which is the volume weighted average price indicator, which is another key indicator for stock traders and investors. It's hugely influential. I won't go into the reasons why, but it's hugely influential in terms of the pricing on the chart, and it's hugely popular. And what we've done here is taken a slightly different approach, as we always do. Let's just take one. Let's take the 10-minute, just pop that up full size, and I'll give you a quick walkthrough here. Now, not only is this one indicator, it's in fact 5 indicators in one. And if I click on the little cog there next to VWAP, it's called the VWAP Pro. If I click on the drop down here, we have 5 versions of the VWAP. So when you invest, or when you invest in the program, or whether you buy this indicator in freestanding, which you'll be able to do obviously once it's launched, you get 5 variants. And you might wonder why we've put 5 variants together. Because they all do something slightly different. They're all extremely popular, but you get the full package in one, so you decide which ones you want to use, which ones you like using for particular applications, or which ones you use for the longer term. If I run through all 5, the top one is the MVWAP, which is the moving VWAP, and I'll come back and explain how they all vary in a moment. You've then got one called the AVWAP, which stands for Anchored VWAP. You've then got the VWAP itself, which is the volume weighted average price. You've then got one called the TWAP, which is the time weighted average price. And this is the only one that differs slightly out of the 5 because it doesn't use volume. It's looking at time and weighting that across the chart. And finally, down at the bottom here, we have one called Intraday VWAP. And the intraday VWAP is one that works on the dailies, the weeklies, and the monthlies, because the others do not. So those are the 5 variants. Now, they all vary in the way that they are applied to the chart and the way they infer the VWAP data. And the biggest difference is on the VWAP starts at the new session. So when you move into a new session, the VWAP will guillotine its old calculations and it will start from the new session, whether that is in the pre-market or whether you choose to start your stock trading and investing from the exchange data. That is when it will start, and then it will calculate in exactly the same way using the same algorithms and present that ongoing. But the starting point will be at the start of the session. The anchored VWAP allows you to locate that starting point anywhere you like. And it's a little bit like a Fibonacci in a way, where you decide where you want to put the significant points for analysis. So for example, here, you might be looking for a significant high or a significant low, maybe a recent earnings announcement, maybe a piece of fundamental data, something significant on that stock, that ETF, whatever it is. You decide where you want to anchor the VWAP. So you just click it on the chart and away you go. So that's the second option. The moving VWAP, what that does is presents the VWAP as a moving average. And this is actually the one that I have attached to the chart at the moment. So once I've knocked this out, I'll show you. The big thing with that is that it means that the moving average, the VWAP, moves across the session points. With the VWAP, a lot of traders like to start the VWAP from a fresh point every day. Absolutely fine. That's the way the VWAP works. But some like to use the MVWAP, and I can assure you, when you're looking at the start point, it's quite confusing on those first 3 or 4 candles to get a grip on where the price is, because you've got a lot of volatility, you've got a lot of oscillation, and it's quite confused, those first 3 or 4 candles. With the MVWAP, because it moves across sessions and is a rolling moving average, it smooths everything out. So it's much, much clearer at those points. As the session gets underway, you can see physically where we are. Where is my price in relation to the VWAP itself? Am I above, below? I'm at it, where am I? And also, where am I in relation to the outer envelopes, above and below? Because on the VWAP, as you can see, we've also included the standard deviation. You can set this yourself. This is at 1 as the default, but you can set it to anything you wish. So again, it's highly configurable, but that gives you your upper and lower envelopes related to the VWAP, which is the red line which runs down the middle. We then have the TWAP, which I won't go into great detail, but is very much a time-weighted average. Very, very different, but again, it's very handy in certain situations. And finally, we've got the intraday VWAP, as I say. That runs on the dailies, the weeklies, and the monthlies, because the other ones up here do not. Those are the 5 variants that come with the indicator. And this is what I meant about we're at the session crossover here. This is what I meant about the MVWAP. It runs through that. If this was on the VWAP, then the VWAP will be starting somewhere around here. That will be its start point. But with the MVWAP, you see precisely where we are, what's been going on, am I above, below, what's happened in the first 5, 10, 15, 20 minutes, wherever, and so on and so forth. So that is the VWAP, which is a multi-tool, it's multivariant. You've got those 5 variants in there. The next one is what we call the market strength indicator. And again, this is based on volume. It's extracting volume, and it is presenting the data in a very intuitive way and a very simple way. And if you're familiar with the currency strength indicator that we've sold for many, many years and included in the Forex program, it has many similarities, because what we're presenting here, again from a volume perspective, is really strength and weakness. Is this particular index, is this ETF, is this stock, is it strong? Is it trending strongly? Is it rising strongly? Is it falling strongly? What is it doing in terms of its counterparts? What is it doing against the index? What is the index itself doing? And more importantly, are any of those getting to an oversold or possibly overbought condition? So it's about all those things. And as I said, you can run this. I've got this at the moment. I've got this on ETFs. I've got SPY here, which is the purple one. I've got the IWM. I've got XLE. I've got a couple of sectors, XLE and XLK. I've got the triple Qs down here as well. And it can be used in so many different ways. You can use it to get a view on whether sentiment across the indices, for example, is universal. And it's interesting, you'll see on the, when I show you the NinjaTrader version, what we had today, we had huge diversion on the futures contracts between the YM and the NQ at the start of the session. Massive divergence. Now, if you're trading, whatever it is you're trading, whether you're trading stocks, whether you're trading the futures themselves, if all 4 of the major indices are moving in the same direction, happy days. Sentiment is universal across the market. There are many, many occasions where you see the NQ leading and the others following, or you see divergence. You need to know about that divergence. And that is just one of many of the applications of this indicator. As I say, it can be used in many ways. You can use it for stocks, pairs trading. You can look at groups of stocks. You can look at sectors versus indices. You can look at commodities, anything you like with it. And it works in primarily the same way, where you're looking at oversold and overbought regions. You're looking at the strength of trends, where the lines are rising very strongly, like here. This is a very strong trend. equally strong trend to the downside. We're looking at overbought, oversold, all the good things that if you've come along to any of our webinars on Forex in the past, you'll understand exactly what we're talking about here. And again, in the way that the VRSI is a mirror image of volume price analysis methodology, this indicator is also, if you like, a mirror image of the CSI. And the two of them, we are going to use the two of them in combination, because when you're running the CSI, you want to isolate out the dollar. So you'd have the CSI, and then you'd have the MSI. So you want to see the dollar for sure, certainly if you're in the commodities market. But obviously, if the dollar's strong, or we're in the stocks area, whatever it is, you want to know what the dollar's doing. So there's so many different ways to mix and match all this. It's just another indicator that we've brought into the fold and added it to the full package. As Anna said, if you're an existing customer and you've got the full package, whether it's on NinjaTrader, whether it's on TradingView, whether it's on TradeStation, whether it's on MT45, ultimately you will get all these indicators free of charge. It's the way we work. Now, having said that, when we roll out the stock program, because of the amount of development work that's gone into these 3-4 indicators, the full package prices will be rising, not by a huge amount. We haven't put our prices up in 11 or 12 years, but they will be going up just to reflect these coming in. But obviously, all these indicators are included in the stock trading and investing program. So those are the three that I wanted to show you. I'll drop onto NinjaTrader in a moment, but just before I do, very quickly, let me show you. This is the new front page of the Quantum Trading Education site. It's not up yet. It's still in development. It's basically the Forex trading program, or the stock trading investing program. This is the new home page. We've got Bertie in there, bless his heart. He's still with us. He's 16 and still acting like a puppy at times. If I just scroll down here, I'll show you the wealth of information that we've actually built in the back end. And this is only part of it. We start down at the bottom with the essentials. We've got technical analysis module, relational, fundamental, and psychology. Then we go up into the PDF library, which I'll show you in a moment. There's 23 PDFs that have been we've developed in there. It's a huge amount of work. Then we've got the live webinars, part of the XT program. Then you've got all these modules, got resources, stock screeners, a load of worked examples across the stocks, from literally the fastest to the slowest time frames, leverage and margin order types. We've got bonds and bond investing, more about the Fed, a really deep dive into the Fed, literally down into the drains of the Fed and things that you need to understand, fundamental stock analysis and financial statements into everything you need to understand, how to read the balance sheet, the P&L, cash flow statements, ratio analysis, all of that is covered. Then we've got techniques of fundamental stock analysis, where we go into ratio analysis and everything else in between. Sectors, hugely important. Stock characteristics, massive, where we break the stocks up into what we call the stock clock, 12 stocks. And this is a huge module where we cover all the primary ways to get into the stock market. And options is a huge module in there. We go into a deep dive with the Greeks, so that you understand the Greeks and what you need to know in order to understand and operate in the options world, because options are now an integral part, whether you like it or not. Understanding the options market is an integral part of success in stocks. It's just, as Anna said, things are changing so fast. This is one of the game changers that has really, really taken the market apart. This is the PDF. I'm not going to go through all these. The PDF library, there's 23 of them there. The last one that's just gone up is your stock picking templates, another huge module where we've literally gone through the 12 major stock groupings and identified how you would go about selecting stocks. We go through the indices, the structure, how they're created, why they operate, and why they're so false in the information they give you. They're flawed. They are completely flawed, the index, all the indices, and you need to understand that. We go into index rebalancing and how to take advantages of that. Deep dives into volatility, 2 of those. Another options module there. Sorry. Yeah, all the international indices are covered here, which we explain in great detail. ETFs are covered in a huge amount of detail. We go into the ROIC, which is a massive fundamental key statistic for analyzing stocks. And of course, we go into bonds and bond investing, not only bond investing, but also bond trading as well, because again, it is all part and parcel. If you're building portfolios, which you would be, then you've got to understand about bonds, what kind of bonds you're going to bring into any portfolio that you develop, and so on and so forth. It's a huge program. That's just a brief look at, and I couldn't tell you the number of video hours that have gone into it, the number of words that are in there. And again, it's a mixture. It is a mixture very much of PDFs, of videos, and online podcasts as well. And we will be doing the online webinars as part and parcel under the XT version. Very quickly, because I've gone way longer than I wanted to. This is the MSI on NinjaTrader. I've got the 4 futures here. I've got the RTY, the NQ, the YM, and the ES. And really just to show you that divergence, just pull that right across. This is what happened at the open. That's on the YM. We had this huge divergence between those two indices. And now they've started to come back together, but not particularly strongly. But it was just a massive diversion and something you need to be aware of. But again, you can run this in any future. You can put stocks on here, ETFs. It doesn't matter. They will be on separate charts, but you'll be using them in exactly the same way as I've shown you over on the TradingView platform. Very quickly. Yes, you can put any markets. The only thing you can't match, you can't mix. So by that I mean you need to put, yeah, you can have an energy complex. So you'd have, you could have the ETFs on here. You could have your sector ETFs. You could have energy stocks, whatever it is you want. All you need to be aware of is that you can't mix instruments. So you'd have futures, for example, would be on one. You'd have ETFs on another. You have stocks on a third. And you just have them running alongside one another. You can have as many of these as you wish. There's absolutely no limitation. And you can have up to, let me just click on it. I think it's 5 on each one. Yeah. And you just add them on in the normal way on NinjaTrader. So that's the MSI on NinjaTrader. Very quickly, because I know Anna's got things she wants to cover. Where are we going? VWAP, here we are. This is on the VWAP. Just to show you, there we go, onto a 30-minute. Pop that up full size. There we go. This is what I mean. This is the VWAP starting up. So we reset every session. And as the session starts, then the VWAP resets and gets started once more. I think that's probably it. Oh, very quickly, apologies. One thing, yes, let me just show you this as well. I mentioned this morning. This is another thing we've been working on. This is Market Analyzer on NinjaTrader, NinjaTrader 8. We will not be developing for NinjaTrader 7 because I can't give you a categoric on it, but I get the feeling that NT7 is not going to be supported for that much longer. And so we are not going to put the development work that's required into it. So this will only be available on NinjaTrader 8, unless someone tells us something differently. But this is basically putting the quantum indicators into the Market Analyzer. I've got the trend monitor and the trends up here. I've got stocks, I've got futures, and I've got ETFs running on here. It's just a really quick, great way to see instantly what's going on across the various time frames. The only thing you need to be aware of on Market Analyzer is the time frame on here is 1 minute default. So you'll need to set up different time frames to see this in multiple time frames. You can see I've got the VRSI set up on here. I've got dynamic volatility set up, so I can see instantly when I get volatility triggers how long ago it was, 48 bars ago there on GLD, 51 bars ago on SPY on the 1 minute time frame. Down here, I've got accumulation distribution, so that's pulling in data from there. I've got pivots here, it's telling me when I had a pivot. I had pivot 3 bars ago on Tesla. I think or is it, yes, Tesla, or Meta, sorry, it was on Meta. And then I've got the VPOC and I've got the VWAP over here as well, telling me where the VWAP is in relation to the price, which I've got over here on the right-hand side. So that will be included as well. Sorry, were there other questions? Yeah, I've got the daily volume here, pulls that in. And if you're not familiar with the market analyzer, I have done a load of videos on it, but I also have to say that NinjaTrader are very, very good in having a really strong video library, and they do webinars, I think, also. So if you're not familiar with market analyzer, I've done some specific to the indicators, but also how to load stuff on here as well. But you know, head over to NinjaTrader and dig out their library, because they do have some good stuff there. But yeah, you've got daily volume, average volume. There's a huge number in market analyzer that you can add on just the standard. This is just pulling in standard stuff to put on your market analyzer. I've just set these up because just to show you a few of the quantum indicators in action. But do be aware, obviously, this does pull in a lot of data. It's very heavy. It's very resource heavy. So you've always got to bear that in mind when you're setting these up, and not to go too mad with it, obviously. Get into the hundreds and what have you. But I just thought this was setting out in a really nice way, really quick way. And it's just a great way to see, you know, what's going on in terms of stocks, futures, and ETFs. And it's, as Anna said, it's blood red all day or all afternoon. That's really where I wanted to pause. Sorry, it's been a bit rushed. I just wanted to cover all of that. I've taken longer than I wanted. So I'm going to switch off and I'm going to pass back to Anna now.
Welcome back. Okay, I've got Trading View, and as I said earlier, I just want to have a look at SPY, which has taken a bit of a thump down as we go into today's close. We saw on Finviz how it's been a bit of a bloodbath out there. But the first thing I'd like to mention is something that I refer to at the beginning. When I said tomorrow is Jackson Hole, what actually happened last year? First of all, markets do have seasonal patterns. We're in August. You don't expect volume to be the same level of volume that you would see in September and October. Those are the really high volume months. March, you know, you can eyeball it. You can just look at a daily or a weekly chart, and you can almost see the seasonal volume patterns, as it were. But it sometimes pays to look a little bit more closely. The first thing that I mentioned way back at the beginning of July, when comparing what happened last year. Last year was a terrible year. Everything got sold off really heavily until we saw that the bottom last October the 13th. Although it was a terrible year last year, July was actually, it was positive, and the first part of August was pretty good as well. And we can see here, this again is on the SPY. You can see here, it's very clear, you know, a nice trend right up until the middle of August. Then we started to sell off, but we had a pullback here. But this is the candle that really caught my eye, because it's Friday the 26th, and that was the day of Jackson Hole. And then it was all, you know, it all came off again. Yes, it reversed, and then we had a really, really bad September. This is where we are at the moment. So just bear that in mind. And you will often see articles at the beginning of a new trading month saying, well, what are the seasonals for this time of the year? Sometimes they play out, sometimes they don't. Gold has a seasonal pattern. I mean, one of the correlations that a lot of people like to look at is the gold buying season with India. In India, it's you know, holding gold. Everyone tries to buy gold. It's held as a store of wealth, and sometimes that can affect the spot price of gold. You know, the price of physical gold. So, as I said, something to bear in mind, and I just wanted to highlight that for you. One of the key elements of volume price analysis is being aware of very, very important, significant support and resistance. how you measure your support and resistance. You can eyeball it. You can, for example, I've done this when I do presentations to trading groups. If we take away the lines that we see up on here, this is what we call our accumulation and distribution indicator. And essentially what it does, it paints these lines. They're hatched, but you will notice that some of them are thicker than others, because the thicker they are, the stronger that level is, whether be it support or whether it be resistance. So not only does it put the lines in for you at those significant points, but it also gives you a very quick visual representation of, well, how strong is it? Because if an area is strong, it is going to take more effort, it's going to take more volume to actually break through. Sometimes it breaks through, but there's no follow through. So price comes back and retests it. So if we actually just take that off, just hide it for the time being, and we're left with a bare chart, you could certainly go in and you can see them, you can just eyeball them, you can draw them, you can put them in yourself, but you don't have necessarily any way of knowing their significance in terms of their strength or weakness. One reason people like to use a Fibonacci is because within Fibonacci levels there is a hierarchy. Some levels are considered to be they carry more weight, they're more powerful. You're more likely to get a reversal at a certain fib level. We use Camarilla. Camarilla is exactly the same. Certain levels within the Camarilla indicator, you can be, more often than not, price is going to pause at the very least and attempt to rally, pull back, and then perhaps retest it again. So, as I said, that's really important to mark on your chart, even if, or be aware of these levels, even if you are trading on the faster time frames. And here we see this level here, which is a 436. And the level I actually highlighted yesterday was this one, this little level here at 443. If I just come off let's go back to the actual levels that we can see here. And what we have here, this is, it's only a minor level. I think it just about managed to poke through, to pierce it. And it did actually, there was a bit of a follow through today, but nothing has come of it. And when we look at the faster time frames, we can see why, because when we look at the pre-market, what happened in the pre-market? The pre-market, there may not be an awful lot of volume because the participation level is much, much lower. But the pre-market can give you these levels as a sort of setup, targets, if you like, where price has just failed to get through, and you have to respect that if you are trading the physical market. On I'm just going to take that down, because what's not on here, which is on this one, is the volume point of control. Now, the volume point of control is very similar in appearance to the volume at price, which is volume at price. That's right. It's transacted volume at different levels. And what we have here, which is this yellow hatch line, which may not come through very strongly on your monitors, but that is the actual point of control, the volume point of control. It's a fulcrum point. It's also the area of this histogram where the price has its transacted volume at its over a period of time. This is also taking into account the price action over here, as it were. And what you end up with is you end up with these bulges. You end up with these what we call high volume nodes, and we also end up with what we call these low volume nodes, where it's much, much narrower. And they are really significant, because this is what we're looking at, support and resistance, not just price-based. We're also looking at volume-based support and resistance. And it becomes even more important when a price is just above what we call a low volume node. And in one of my chart analysis that I did, that went up on Twitter, when I looked at levels, and it was basically on this piece of price action that was coming down here, where we can see that the actual buying came in. It was quite substantial. We had a volume of 98 million. The other thing about volume, which we touched on with the market analyzer, is where we look at average volume, and 98 million on that day for the SPY. It was above average, but it was also last week. It was OPEX. It was a lot of expiration that day. It was the monthly expiries. So you would expect a great deal of volume. That being said, you saw that it is an anomaly of sorts, if you like. There was a follow through on Monday, but certainly not to that extent. And the volumes during August, you would expect to be slightly below average anyway. But what's important is the low of the candle, which was 433, but also this line here that we see, which is part of the volume point of control, which is at about 432. And one of the questions I was asked was saying, because I made a point of saying, yeah, okay, this is what we're seeing, but if this is going to break, and it breaks through 432, which is this line that we see over here as well, this support line here, what the SPY is looking at is going into a low volume node. And what that happens is it can be a very, very fast move, because what volume does, it acts as like a cushion, and there's not much of a cushion there. And when price is also in a high volume node, it's a bit sluggish. Yeah, it's going to move, and you might get some volatility on some of the time frames, but it really doesn't last very long. But once it gets into one of these low volume nodes, then it really can be a washout below. And what I said the first, it will get through there and it go down to 422. But for me, the most important level from there is actually it's 417, because 417 is, if we go back and look, we have this sort of this sideways movement. It's where we had it was kind of a springboard for the rally that we have at the moment, albeit at the moment we had a bit of a pause at what is the volume point of control. So being aware of those levels on the daily, and we do have to hunt around and find them. Sometimes you'll find them on the hourly chart, sometimes you won't. Sometimes the hourly chart, they're just not there. So you do have to look up and down the time frames. But in terms of the time frames for actual trading and having to take a trade, that's pretty much up to you. But the ones that I think work really well are something like the 5. Look at the 5, look at the 15, and certainly look at the hour, and just be aware of what is happening on the daily. The 15-minute, this has just been looking at SPY for the last, I don't know how many months that I've been looking at it, and looking at both the pre-market and obviously the physical market, and just seeing how the levels are put in, as it were. And what I've found is, when we look at something like, say, the 3-minute, which I know a lot of traders like to use, and even the 1 minute, there isn't really enough there from the pre-market. There's just, in some ways, from a support and resistance level, there's too much. There hasn't been enough time to build these levels. Levels do need time. You need that kind of price action. You need the price to touch it on a certain, in multiple times, as it were. By all means, have it, and even the 5-minute. But for some quirk, and I don't know whether it's just because of the time of year, I haven't had time to do any sort of long-term observation on it. It's not back testing, it's just purely observation. This is the 5-minute chart. I found with the 15-minute chart that you do get a very good sense of what has happened. As I said, this is the pre-market. we have this strong level. This is 440, 445. It actually was, what did it hit? A high of 446. But can you see this channel that was built in the pre-market? It wasn't going anywhere. Then obviously you get the volatility and the nonsense that goes on at the physical open. Everyone sort of jumps in. Not a huge amount of volume. You know, sometimes you would expect it to be more volatile. But what do we have? Well, we have the break from this. This is support, floors and ceilings. It now becomes resistance. It went down, then it went straight back up. And if we look at the amount of volume, just the height of the volume bar, and look at the height of and the range of that candle, they're almost, I mean, that's slightly bigger than that one. I know one is selling and one is buying. But from an anomaly point of view, given that, you know, it's pushed back that amount, it's really not been supported. I would have expected that in itself is an anomaly. Plus, it's gone straight back into this what was support, but it's now clearly resistance, and the next candle then confirms it. Now, what I've got here is the VWAP, and what I would say is, when we look at it on the faster timeframes, the temptation is with VWAP is that as soon as the price goes over the VWAP itself, that is a long. I've actually got the envelopes on here, which is the one standard deviation, and this is where a lot of traders get trapped. So even if you were tempted to go long there, because you've got this strong resistance, that of itself will tell you, just hold on a second. And for a sort of point of entry, if you like, it's bounced off once, it's come off it once, bounced off twice. This is the third time. It goes through, and yeah, what are we into? We're now half an hour. And we always say it's the first 20 minutes, 30 minutes, just wait to see what happens. And in fact, it does actually sell off. And we saw the sell off much more dramatically in David's VRSI. And I've just got the regular volume bars here. And it is a waterfall. The volume is fairly consistent. There's no sort of major anomalies there. That is anomalous because you've got low volume and it's not going anywhere. Plus, it hits the bottom of that envelope. It almost acts like a moving average. So, you know, it's a very unhappy looking chart. Obviously, you want to know where is this going next, and the levels are now being put in for us on this time frame. And given what's happened in the last sort of 15 minutes, David, 15 minutes that we've seen here, this is now going to be resistance. And I suspect now the price is just going to go, it's the end of the session. We're going into the aftermarket, and chances are it will just go sideways. But we've got to look at our levels. We've broken through here, which is 438, 436. We're now down to here. We've broken 437. We go back to the daily. As I said, you know, in our head, somewhere you must put these levels. You must mark them on a separate chart, on a piece of paper. Go back to the hour, as I said, even up to the daily chart, and just see we're down at the volume point of control. Where's the volume point? It's actually at 436.64. It's at the moment it's 436.86. That is actually a strong level. So with any luck, because of what tends to happen at the volume point of control, it may actually pause and simply consolidate and see what happens. But isn't it interesting that it's at a fulcrum point on the daily chart a day before we've got Jackson Hole, and we know what happened last year. I'm not saying the same is going to happen, because it is the fulcrum. Could it go? It could bounce back up, of course, or could it simply break through? But the key, even when breaking through, as I said, is this level here, 432, and that would really accelerate anything to the downside. So multiple time frames, price action and volume, key indicators, support and resistance, certainly with the VWAP, absolutely invaluable, and with the volume pressure indicator that we've developed, we really do believe that putting it all together has just given us and our quantum package users, and certainly our students, really the best possible chance of being not just successful but super successful in trading and in investing. That's what I was going to say on that. I've just had a message come up on my screen. Has it come up on your screen? My system's going to, my screen, my monitor's actually going to shut down in 5 minutes. We can't really leave without speaking about NVIDIA. It hit an all-time high yesterday. It's actually come off a little bit today. I don't know if you've been following the narrative about NVIDIA. I wrote about NVIDIA back in February when I basically said, you know, this was one of the stocks for the future. I don't know if anybody paid any attention to me, but it's my belief AI is very much the future. The difference with NVIDIA, it's been around for 30 years. For whatever reason, and one of them being is that it's one of its core products, the GPU, is actually invaluable to I think it's called generative AI, which is ChatGPT. Their chips are in such demand from Microsoft, Apple, countries all over the world. Saudi Arabia has just ordered 10,000. They've sold all their stock for this year. And to me, it's very much the sort of stock that someone like Warren Buffett would, he talks about a moat. We explain all this in the program, where you're basically looking for a solid company that has product or products that are almost quite a monopoly, but they're kind of protected, and they've got room to not only expand but also their pricing. At the moment, their nearest competitors on nowhere, I think it's AMD and Intel. They don't seem to have, they're not really touching them. And as I said, it's been going for 30 years, but they're a bit like Tesla. They seem to have attracted an awful lot of negative sentiment. I read one tweet from, I mustn't call them tweets anymore, from someone who was saying that every time, you know, the price was going to go up, it was going to be short. Is it going to be heavily shorted? But seriously, we may see a pullback, but it is one of the companies that's very much going to be the future of AI, unless they do something really ridiculous. They've just bought back 25 billion of their own stock, so that should go up. And I think what might happen, a bit like Apple, we'll get to a point we'll probably get a stock split later on. David and I have been very positive about this, as I said, since certainly since the beginning of January. And AI generally, we've been doing a thing about it later, along with quantum computing. They are very much the future. Yes, we may get some correction between, you know, in the next few months, early part of next year. But once we've had the pullback, I think the market, great buying opportunities. Those are the sorts of sectors that are really going to take off. They've taken off now. People say they're in a bubble. They're in a little micro bubble, as it were, but they've got a very solid future ahead of them. Finally, what we need to keep be aware of all the time is bond yields. Haven't talked about bonds too much. We will in other sessions. This is from TradingView. It's great. We have all the rates for the major economies, and we can see here in the US, a lot of money has gone out of stocks simply because you can get guaranteed returns on the 1 month, the 3 month, and up to the 6 month. But these are the yields that we need to watch. Until these yields start coming back under 4%, the stock market, it's absorbed these the higher, you know, the interest rate hikes, the higher inflation, but they will begin to have a detrimental effect on stocks. But we'll talk about bonds the next time. David, anything else you want to say? Is that
No,
I'll pass back to David, because literally my screen is about to disappear from view. You'll probably be able to see it, but I certainly won't. So I wish you, I will say goodbye. Look forward to seeing you all next time, which I think will be sometime next week. I hope you've enjoyed it. If you've got any questions, we haven't answered them, it's anna@annacooling.com or david@quantumtrading.com. So enjoy the rest of the trading week and watch out, see what happens tomorrow.
hopefully you can see my screen and hear me. Very quickly, just to wrap up, this is on the 5-minute for SPY, and really just to show you what we were looking at earlier on in terms of the VRSI on this time horizon. The flat trend, it's sliding lower in this phase of price action, and you can see here that's represented on the VRSI with these very low pressure bars here. And then right at the end of the day, which is what we often see, we will see a dramatic rise in volume, we see a dramatic rise in pressure, and we get that pressure represented in this nice price waterfall to close the day off on the last half an hour of trading, which is just a great way to finish. So, and we're in post-market now, trading at 436.80. So it's a little bit above the close at 436.92. So maybe sideways moving, certainly in the post at any rate. But I thought it'd be nice just to show you that. And again, it demonstrates that the strength of the trend, very steep here. This is 45, 50 degree slope down, and we're getting a very strong pressure confirmation on the VRSI below it. So I just wanted to show you that as a wrap up. Drop that out the way. Very quickly, where can you find all the bits and pieces? This is Anna's site, annacooling.com. You'll find all the books there, either in Kindle or in paperback. I have to say the comments over the years, we've got 3,500 reviews or something like that. It's very humbling to read the reviews from people who've read the books and have found their own success and have taken the methodology and developed in their own way and bolted whatever they wish to on top of it. It's just provided a foundation for people, traders and investors of all denominations, in terms of what they're trying to do. It's just very humbling to read those comments and what an impact the Anna's education has had on them. I can't tell you what it means. This is the new site, and you'll be able to click on either the forex trading or the stock program. We've put together lots of pricing we've obviously got to consider people who wish to buy both programs, which would be great. Or if you're on the forex program and you want to migrate and include the stock program, we will cover that as well. I'm not going to go into it in detail here, but it's all covered. And again, if you've bought from us in the past and you want to upgrade to one of these programs or both, we can cover that off as well. There's a lot going on here, and there are a lot of pricing issues, but we think we've covered all the various alternatives that maybe there are one or two that we've missed, but we've tried to cover them as much as possible. And again, that's added further complexity to the back end of getting all the pricing sorted out as well. And finally, where are we? That's education. Over on software, quantumtrading.com, this is where you'll find all the current indicators, and they will be added. All those new ones I've mentioned here will be added to these in due course. And we will add them to TradeStation and MT45 as well. So they're all there. As I say, the full package bundle prices are going up. They will go up as soon as those indicators are added. So if you're considering buying the full package from us, now is not a bad time to buy. They're not going to go up dramatically, but they will be going up by a few $100s just to reflect those new indicators going in the full packages. But thereafter, you will benefit in exactly the same way as we develop more indicators in the future. You will get those free of charge, as indeed current customers do at the moment. Thank you very much indeed for coming along to this evening or our time. I hope you've enjoyed it. Hope you found it useful. We will be back on a much more regular basis now, as Anna said, on a weekly basis, and we'll be introducing some of those indicators more regularly as well as we get close to the launch. So thanks for watching. See you soon, and bye for now.